Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, we're going to answer a common question we get from our clients, which is, what is an annuitant? With an annuity, there is a person in the annuity contract called an annuitant. And the definition of an annuitant is the person whose life determines the annuity payments. The insurance company uses their age and life expectancy to calculate income. Okay, in layman's terms, basically means the person who's being insured. Okay, so a comparison that I'll use is life insurance. When you buy life insurance on yourself, let's say to protect your spouse or your children, instead of using the word the insured, aka you, the annuity world calls that an annuitant. And it doesn't necessarily mean it's the person whose life determines the annuity payments. You know, you don't have to take a lifetime income or fixed period income from an annuity necessarily. If you want to use an annuity to grow tax deferred, whether that's a fixed interest rate or for an interest based on stock market performance or being actually in the market, or using it for like long-term care or Medicaid, the insurance company has to determine the benefit of owning that annuity, and that's typically the annuitant. In most annuity contracts, there's three people. Picture a sandwich, okay? The top piece of bread is the contract owner. The meat or protein or whatever's inside of the sandwich is the annuitant. And the bottom sandwich piece of bread is the beneficiary. So if you just picture those three things, the annuitant is what's insured. In most cases, in an annuity contract, the contract owner and the annuitant are the same person. Okay. The other common thing with annuities, if you are taking lifetime income, is you're having co-annuitants. So let's say a husband and wife, husband, wife. And they want to do a joint life payout. And what that means is the annuity contractually guarantees that you and your spouse are going to get the same or better income for the rest of both of your lives. So 2 lifetimes for the price of 1. Going on to some questions that I'm being asked. What is the annuitant's role? The annuitant's lifespan determines how long income is paid. How much income is paid. The older the annuitant, the higher the income typically is. Who controls the contract? That is the contract owner, not the annuitant. What is the death benefit on an annuity based on? Well, it's based on if the annuitant dies. What's the difference between annuitant and owner? The owner controls the contract and money. The annuitant determines payout calculations. What most people miss with annuitants: a younger annuitant equals lower income and longer payouts. Older annuitants, higher income, shorter expected payout period. Who really needs to pay attention to the annuitant in the contract? That's usually married couples if you're doing joint income planning, like I mentioned with co-annuitants earlier. And then estate planning situations. Like life insurance, and you're buying life insurance on somebody in your family in case they die and you're the beneficiary. It's kind of the same way with annuitant. On annuities, you may buy an annuity on somebody in your family, and when they die, you want to make sure the insurance company doesn't receive the rest of that money and you as the beneficiary does. That's where the annuitant comes into play. So those are the common questions I get about annuitants. If you have any specific niche questions, head on over to your favorite search engine, type in the Annuity Expert, or call us at 770-755-1565, and we will answer any questions that you have. Free at no charge, no obligations, and we'll give you some advice to help you make the best decision for your situation. Hope all is well. Like, subscribe, and we'll catch you on the next video.